Good morning, day traders, and welcome to Market Minute, a hedge fund trader's technical analysis of the market for Thursday, April 14th, 2022. Let's get after it. So first thing to note here today is that today is the last trading day of the week, right? Tomorrow's a market holiday, so markets are closed. That means we've got daily expiration contracts on the index level, right, and sort of on the equity level. So we need to be a little bit cautious here today. My bias right this morning after yesterday's inside bars, or a lot of inside bars, so not play anything that expires today, and just to buy myself a little bit of extra time. In general, right, my belief is that it's very hard to sort of start a trend going into a long weekend, so I want to be a little bit cautious here this morning. That being said, right, I have more of a bullish bias than bearish bias here after yesterday's inside bars, right? So we had very low volume, right, but consolidation within sort of previous ranges. So low volume consolidation, right, tends to tell me that bears failed to reclaim control. And because the volume standard was so low, right, just sort of seems like they might be out of enthusiasm here or out of that steam. So if we can get that breakout here today above that 444.20, certainly feels like there's room up towards that 445, 445.80, and then eventually that 448 zone. We just need to be a little bit cautious here with these first couple wicks, right, on the 11th and 12th, and just make sure that we're not getting chopped out and stopped out, right, chasing those levels. So targeting that right risk reward, make sure that profile looks perfect is going to be our number one priority here this AM. Similar narrative here on QQQ with a strong normal body bullish candle, inside bar, and then a little bit of weak volume. Now, weak volume right on that inside bar is fine, right? Formal consolidation that looks more bullish than bearish. We want to see sort of one side giving up, right? So when we see that inside bar, that's what we want to see, right? So it's not a bad sign here for us. If this thing can break out over that 347.75, we have a little bit more room up on that first level than the SPY towards that 348.90, right? Call it that 349 zone, and then 350, and then 352. If we get breakdowns here, maybe we can look for rejections off of that 347.75 area down towards sort of low of day. But like I said, bias is more bullish than bearish here this AM. Similar narrative here on Apple, although less formal consolidation, right? So we got that kind of bullish engulfing candle where we closed above sort of previous high and sort of looking to maybe continue this trend here from sort of, March 15th to the 29th. So maybe now we're sort of recovering that strength and looking to sort of run this thing up. We're not really getting a gap up, not really getting a gap down here this AM. So not going to put too much stock into that price action. But same sort of narrative like we talked about on the index level, where maybe it's a little bit challenging to start a trend here going into a long weekend. If we can break over that 171.15, certainly feels like there's space towards that 172, 172.80, and then that 173.50 areas. Tesla is maybe the most challenging setup here today with a really significant gap down compared to sort of a lot of our other leading names. Now, this could be on that sort of Twitter narrative, right, that Elon Musk is making an offer, but I'm not going to put too much stock into that news narrative here this AM. If Tesla can show us that momentum and sort of recover, we're going to be looking for a breakout over that 1027, and there's a lot of space up towards that 1040 and then that 1050 mark. If we can get a breakdown under that 974, we've got a little bit of space down towards that 960, right, 955, 940 area. Yesterday, right, we tried to make that lower low under those levels, and we're unable to sort of sustain that area. So now looking for that momentum to step in, push things forward, push things up, and then we can hopefully get a little bit of follow through. But today, right now, it's got to move 23 bucks before it gives us that breakout. So maybe we want to be a little bit cautious here this AM. Microsoft, right? Really nice little inside bar there as well, but gets a little bit challenging here with the levels that we have from sort of the 8th, 9th, and 10th of March. So I want to be a little bit cautious here. If we break out over that, high of day, we're just going to really struggle for that risk reward profile within this sort of chop box. So sort of this range here, right? If we can get that breakout over that 291 area, that's when things start to get interesting for me, and we have a little bit more evidence of there being bullish momentum. So we have that sort of room towards that 292.70, and then a little bit of a gap fill towards that 295 mark with some resistance at that 294.60 area. Right, AMD, really nice little inside bar here as well, and then now gapping up here a little bit this AM. So we've got that full body bullish candle, we've got that inside bar, gap up, weak volume, and then a little bit of that $100 psych level that we need to be cautious of. If we can break out over that 98.80, certainly feels like there's room towards that 99.60, right, $100 area, and then a little bit of stickiness around that $100 mark before it finally breaks out towards that 102 barrier. NVIDIA, right, normal body bullish inside bar, and then a little bit of a gap up here this AM, but sort of a disappointing volume profile. Again, we talked about how on inside bars, we want to see that weak volume because we want to see that indication of one side giving up. Now, if we're comparing this candle shape compared to some of our other candles that we've looked at, right, on the SPY or on QQQ, NVIDIA's candle certainly looks like one of the weaker ones here today. So I want to be a little bit cautious with this. Maybe not the strongest indication of this being fully bullish strength. That being said, right, if we're able to clear that 225 area on volume, right, see that momentum step back in. We have a lot of space towards that 227.30, that 230 area, and then that 231.50. Above there, right, maybe we can climb up a little bit higher, but I don't want to get too greedy here, as this lack of momentum or this lack of relative strength makes me think that there probably isn't that much follow through here this AM. And then last but not least is BA. So BA giving us a really nice increasing volume bar on that bullish engulfing volume, right, and bullish engulfing candle. So really nice little momentum here that seems to sort of be invalidating a lot of this weakness we've seen in this sort of, kind of bouncing line. We have a little bit of a trend line here that's maybe bouncing off of this March 8th, right, April 11th low. So a little bit of a month of consolidation here. And would like to see this thing now break out over this 183.70. We think we've got room towards that 185, which is sort of that, March 11th high, and then above that we've got really moving like $2 at a time towards that 187, and then slowing down at that 188 and then 190 barrier. So that's sort of how I plan on dominating today's price action. If you guys like this video, please like and subscribe. If you want to trade with me live, you can start your free 7-day trial at dtrtrading.com. Otherwise, have yourselves a fantastic session, and talk to you guys all on Monday for the next Market Minute.